Hello and welcome to nkdtradezone. Today we'll be going through a simple strategy of how to trade using a low time frame. But before we proceed, make sure you like this video and subscribe to the channel. Let's begin. So to use this strategy, all you need to make use of is a low time frame. Let's assume 3 minutes or 5 minutes. At the very highest, you use the 5 minutes time frame. 50 minutes is way too much and never go near to the 1 hour. So going on this now, all you need to do is to bring out a trend line to trace your price across several positions. With this, you are able to locate the points where you put your trend line and when to make entry into a trade. Now, when to make exit out of the trade will be determined by your Fibonacci retracement. I'll be teaching you how to do this in a few minutes time. But for now, let's learn how to make use of the trend line. For us to do this, let's go back a little bit into the chart so we can make assumptions with previous historical facts that has already been accomplished. So let's say we begin from here now. How do we go about using this now? First things first, you need to zoom into your chart properly. Once you zoom into your chart properly, once you know more of this strategy, you know that when there is availability of a market and when there is none. So how to know when there's availability of market? You can determine it in this way now. So first things first, you must have a point that correlates with a second point and then a third point. How do we do this? First things first, you have to look for a point 1, then a point 2. As you know, in the crypto and financial market, no price goes up forever, neither does any come down forever. You have to have a point whereby the market is going up, another point the market is going down, then the market is going up. To make use of this strategy, you have to take out just 3 lines. First things first, a first line that is independent, like this particular line below here. Then second line must be a line that has a point of reference. Then your third line is the line that correlates with the first line. So what do you do now? First things first, you get out your first line here, which is this, the first point. Then you get out what the third point. Now you trace your first point to your third point using a trend line. Let's do that right now. So this is my first point. I put my first point there. Then what do? I trace it all the way now. This is my third point here. So this is the first point right now here, then this is the third point. Now to do this, always make sure you try as much as possible to get the bodies of the candle. In a candlestick, this is what we call the body, a particular section that is completely covered. Then you talk about the wicks. The wicks is this slim part which has no body covering it. So using this strategy, try as much as possible to get a complete covering of a body, or let the line go through the body. If you learn more of the candlestick, of the trend line, you will know what I'm talking about and know how to apply it. Let's do that. First things first, let this line go through the body. Then the next thing, the point 2, let it also cross through the body. So we are done and settled on that. Avoid using this line. The second thing you have to do is trace the second point. Now let's call this here the second point. Now what do you do to the second point? You carry a trend line, place on it too, then extend it towards a direction. Now your trend line can be in several ways. It can be in the form of a descending channel, an ascending channel, a consolidation, a pennant, or a triangle, symmetrical or asymmetrical triangle. So let's proceed on that. All you have to do now is your second point, you drop it here. Now you can see this is in the form of a pennant, and this is a bullish pennant. If pennant in which the price goes all the way from a high price to the low price, then keeps on going in between that particular pennant now till it breaks out. So let me give you a configuration of different types of possibility we can use in trading this. Now the first, as I said, is your falling channel. This is the pattern of a falling channel, whereby you have something like this. Your chart goes all the way down to this period, keeps on going down. You see what the price starts from here, goes up, comes down, goes up, comes down, goes up, then before you have a breakout. Now the next is a rising channel. It can be in such a form like this, whereby you see your chart does this. It goes down, comes up, goes down, comes up, goes down, comes up. Now you can also have, as we just showed now, a bullish or a bearish pennant, whereby you have something like a triangle like this. The price comes from either down or from up, then keeps on going in between this position. Whenever it hits the blue line, as we are making use of a blue line here, it goes down once again, goes up, comes down, goes up, comes down, and keep on doing that after every single point that it touches the blue line. So now let's make use of a live reference for this. Now I'll be making use of this particular point now, and I'll also give you references to many other positions of this chart. First things, make sure that it touches the body of the candle. Once it touches the body of the candle, then we can trace the third line. So the first line you use is what? The line of the first and then the third, making sure it touches the body. Now it has done that. Now the next is your second line. We get our trend line over to the second line, then try to trace it out of the second line to any possible body is able to touch. Now in this point, whenever this is happening, you find out that your first line, as I stated, is always an independent line, which means that there is no support or resistance near it or anywhere it can touch. That is what happened. Your first line must always be a line that is independent. That is your point. It must not have any particular position near it or nearby whereby it can touch. So your second line should be the what? Line whereby it has where it can touch. So looking at this now, you can see that it can touch up with this now. Then we have what? A bearish pennant right now. I made sure that the line touched the body here, then we came all the way down. Now let's assume this was our what? First position here, an independent position that has no support, no resistance, no any price around it. Then it came all the way up to the second point, then it came to the third point. Now let's assume that you saw this early now and you bought here at $66.321. Then after buying, you did what? Went all the way up here, then it broke out here. At this point, you are selling at what? $66.506. There wasn't much profit made on it. So talking about that now, we can also what? Get another thing, and another fact is the fact that what? Looking at this position here now, this can also be your first position. Why is that? Because if you extend this your trend line, it doesn't touch any other position. That is one thing that you use in notifying where your first line can be. Your first line must be a line that doesn't touch any position at any point. So looking at this, you call this your first line, this your second line, then this your third line. When you trace it back now, you can find out that what? At this point, if you are what? Sold here, which is at the top, you what? Take profit down below here, then you sell at the bottom, take profit up here. Now another thing that you need to fundamentally know is how to set your stop loss. Your stop loss, as I stated, will be set by your Fibonacci retracement. All you have to do is to bring out your Fibonacci. Most of you might not know how to use this, but it's very simple. Your Fibonacci has several points, but we make use of the point 1.0, which denotes 100%, or to the 0.0, which denotes a starting point. So put your starting point now at the previous point. Let's say this was our, I'll have to delete this up. Let's say this was our point 1, this was our point 2. Now we have gotten our point 3. After point 3, you can begin trading. So we put our point 100 up here, then our point 0 up here, then our point 100 down below, but it's not essential. This will be the below here. Let's do that. So this is your Fibonacci retracement. Your point 0 should be all the way at this top here, all the way here. This should be where your point 0 should be at your third point. Then your point 100, which is 1.0, should be at the bottom of what? Where you ended last. And you must make sure that you cover up the whole candle. That means including the wick should be taken note of. This is the only period whereby you have to pay respect to the wick or any price that goes below your trend line. You have to do that. Never start your Fibonacci from inside the trend line. Neither should you not take note of the wick. Always make sure to take every single of them in account. So once you drop that down now, you see the next thing, you are at what? Point 0 here. Now what you have to do right now to get your stop loss position is to do this right now. You move this your point 0 all the way up, then point 23, 0.236, which is 23.6%, should be what should be at the top right now. So instead of you getting your at your third point, point 0, you do this right now. Place this. That is after getting your point 100 at the lowest price of the second point. You then put your what? Point 23 at this point. Now this will be your stop loss right now. This very point here at 66.957. That means you entered at what? 66.750. Then you put your stop loss at 66.957. That is the way to go about setting your stop loss using the Fibonacci. Your point 23 should be here, and then your point 100 should be, make sure that it's at the lowest price, even below the trend line. Let every part of the candlestick be covered. So that's what we'll be doing now. So let's go through now and find other examples of such. I believe with the little idea you have now, you might be able to follow me up on this. Now your first point should be a point that does not have a point. Any other price, second point, third point. Let's leave this out. Now let's imagine I just go to the chart right about now. I can always call this my first point because it does not have any point that is given reference to. This can be my second point here. Then this should be the third point. Now let's get the trend line and see how this works. When you get over your trend line, now put your trend line at the first point here. Make sure it touches the body. Put your trend line at the second point here. It also touches the body. Now for the second point here, which is what? Your point 2. This is your point 3, which correlates with your point 1. Now your point 2, you do this. Put a trend line there. Then the trend line will follow this particular direction all the way up. Now this isn't a good trade, though it was tradable, but as you can see, the market was so consolidating in. Now let's trace out this trend line here. If you trace out this your point 2 here, you can find out that what it was able to correlate a little bit to this position here, but not completely, but it had a point it would have gotten reference to. But in doing that, as you can see, we have a pennant here. Just try to trace out the ray body. Another problem will be, how should I trace this out? This ray body, now you can trace it out like this. You can also do this, whereby you bring the price here and then do this. So how exactly can I note how I will do this? All you have to do is to what? Make sure that there's a reference point between the point 1 and point 3. Then the point 2 should have where it's correlating to. Now as you can see, I've done this. I tried to trace my point 2 all the way from here down to this position. That is how you should always make sure that your point 2 is. It must have a position it correlates to at a given direction. So we've done that. Let's trace that out right now. So we've done this now. So you can see this. Now let's say this was our first point here. We entered at this point, came down all the way here, came at this third point. Now this third point here, you can see that we are at $66.808. Now as I stated, you have to sell at the top, you buy at the bottom. So if you had sold at $66.808, you will find out that what? You will come all the way down here and take your profit. Now the moment you get down here, you can see the price starts going up once again. From this point here, it starts going all the way up. If you had bought here right now at $66.412, you will take profit up here, and you keep on going up and down up until it breaks out at this particular location now. So your stop loss, you use the Fibonacci with this technique I showed you of the 23% to note where you take as your stop loss position. Now let's get another. This is not good for a this is not good. It's not good for a position, because as you can see, if you take here as a point 1, the point 2 does not have anywhere it correlates with. So we can't do that. It doesn't have anywhere, so you can't take this. Now let me give you a live example of this. Now imagine you take here now, because it does not have any price around it where it can correlate with. You take this your point as point what? Point 1. Then your point 1, as you know, should always get to a point 3. So this is your point 1 right here. This is your point 3 right here. Now let's look at this as what? Your point 2 right here. As you can see, it doesn't work because it's now very slim and not really reasonable. You can't get or make anything out of this. That is one of the sides that you have to look into. Now if you trace out this your point 2 now to this very point here, this is an external point where your point 2 will link to. You trace it all the way. Now let's say this is your point 2 right here right now. You can see that it's too slim. You can't make any profit from this, so you might end up just paying taxes without having profit. So you leave out on that. Let's look for another good opportunity. Opportunity always come in the fact that you know the price goes up and down, so you take note of it. Another good opportunity might not be seen that fast. That is why you have to make use of several markets, different markets in doing this. I'm trying to get the best fit now so we can analyze this properly. So let's look at this. We had an opportunity today. I might use the opportunity today and show you guys on that. Let's go over to the recent chart and show you the opportunity we had today. So as of today, we had this opportunity here. This was it right now. We had a point here. We had another point here. So this was our point 1 here, which did not have any point it's correlating to. Then this was the point 2. Now let's put our trend line to trace this out. Now this was the point 1 here. Then this is the point 3 right here. Zoom in a little bit, then you extend it. Now you find out that what? We kept on going in something like this. kept on going in a direction like this all the way from here. We got here. Then once we got here, you can see what happened. It kept on going forward. Now this was the next point here, which is the second point. Now your second point, as I told you, must trace down to somewhere. Now your second point traces down to this location right here. So once you trace this location to your second point, which is this, you do this right now, put it at that point, then trace it all the way to your second point. Now doing that, you can find out that what you've gotten a good location, and this is your location right now. So let's say you put this as your first point here. It started all the way from here, got here at the second point, got here at the third point. Now you find out that what you bought from here at 111.554. It went all the way up here to 117.537. You sold here from 117.537 all the way down here. You have made profit. Now at this point, you can see what there was a breakout, and once there's a breakout, you don't buy anymore. You just what leave the market and look for another opportunity, or you trace out another different line. That is how you work with this. You don't buy when such happens. Whenever the market goes out of here and refuses to come back in immediately, you look for other trading opportunities, because at the end of the day, it might be that you are about to go into a different direction. Like this can happen now, as the trend line was broken out of. Instead of going back in immediately, it decided to come out of the trend line. Such a thing like this can happen in a short run. You can see the market do this. For all the way from up here, it goes down here, and that's all. It never gets back into this triangle or the trend line anymore. It just keeps on breaking out of it, because once there's a breakout, there's a tendency that the price will never respect that zone and keep on going in the other direction. So we can be seeing such a thing from this. It might pay respect to the nearest support, which is here. So this is the nearest most fit support at 0.105.008. We might be seeing it getting all the way down there now. So that was the opportunity that came out today. So if you had traded this, took this at your first point as your second point, then this as your third point, you would have made profit going all the way from here all the way up, then from here all the way down. Then after the breakout, you leave the market. The same would have happened if you had done this too. Let's get another example. This is your point 1, then this is your point 3 here. So this is your point 1 right here. Let's get the body. Zoom in right now. So this was your point 1 here. This was your point 3 here. Then your point 2 is here right now. Let's do away with every unneeded line. So this is your point 2. Now where do you get your point 2 to? Where do you trace it to? You do this. This is a point that you can be traced to. Then you connect it. Let's zoom in right now. So if you zoom in right now, it was able to touch another point here, which was not part of it. Then it went all the way down to the point 2, and this was your point 2 here. This was your point 2 at this location. So this was your starting point, point 1. This was your point 2, and this was your point 3. Now this is the point where your second point was correlating to. Your second point must always have a particular section where it will touch, and this was it right now. Zooming in, this was it here. This was the point that your second point touched right now. Not this body. The body is not part of it. It must always be an independent point, but not a point that does not have a body. The point that the second point always touches must have a body. So looking at this now, we can clearly see this happening. It went all the way up. This was point 1, point 2, point 3. We came all the way down. Point 4. You've taken profit. Yes, I told you must make use of 3 points before you start trading. So this was the point 1 here, the point 2 here, the point 3. So the point 3 ended at 137.20. You went all the way below to 109.605. You took profit. Now you make your entry here. Once you made your entry here, you went all the way up to what? 112.672, and then you can see the breakout continued. And when the breakout continued, you find out that the price never broke into this trend line again. Rather, you kept on going all the way up, broke out this resistance, and this was where it stopped. Why did it stop here? It stopped here because you have gotten a new second point, and this new second point was what you traced all the way down here. Once you trace this point down here, you got all the way here, and that was where the new signal was activated. So at that point now, we used this as a signal, this being your first point here. Then we correlate it to the third point, and such happened once again. So what can we be expecting in the market now? So this was your first point, this was your second point, this was your third point. trading opportunity came in, you traded all the way up here. Another opportunity came here, you traded all the way down here. Then it broke out, and immediately broke out. What happened here also happened here. It has decided not to go into the trend line again, so you have to what, just keep on waiting up until it begins falling, because I don't see the possibility of it going into the trend line. Rather, it keeps on creeping on the trend line all the way up until once it loses momentum, it starts falling down. So that's what we have to be expecting in the market now. So let's talk about this. Is there any possibility of seeing any new tradable market here? Looking at this clearly now, we have no tradable market, because this is much more of a consolidation. We can't see any tradable market because we can't locate any 2 points. This surely will be your first point, then this will be your second point. So this might happen very soon in this market. You can have something like this, your trend line. Okay, let's get the trend line. This will be your trend line, which will touch this first point here. Then the first point, this might be your second point. So as you see, the first point did not touch any other point, so it's eligible as being a first point. Now this might be your second point right about here, if it doesn't break out of it. Then looking at this, so this is your first point here, then this is the third point which it correlates with. Now somewhere here should be your second point. Now your second point, as you can see, can touch this position here. So this is what we do. Take a trend line, trace it all the way from here, touch your second point. So you can see this is happening. So right now we can expect such a thing like this now to happen in this market, whereby it's I've traced this out. So you can see that your second line, it touched the body, it touched this point here. Your first line is independent, your third line is also what, independent. So they are not touching any other body of any, but this is your second line here. It touches the body of this, taps into this, then what, correlates with this. So we can expect the price now to what, drop all the way from here right now, which is what, 0.113861, all the way below to what, 111746. Very possible. And one major thing you should always know about the market is, most of the time this market pays respect to a support and resistance. At this point now, you have a strong support. As you can see down here, you have a strong support. Let me explain this support to you right now, taking this line up. So this is a support because you can see that at this point here, it respected that very point. It was here and what, decided not to go through here. It made a consolidation here, went all the way up here now, hit it once again, and still respected this previous line here, which was what, a resistance that became a support. So there's a possibility that your market now, as you can see, it has started falling, will fall all the way down through this line here, end here, and then do not complete the transaction and get to this bottom. Like as you saw in the previous place, I told you that you might make estimates to take in profit. Your estimate might be based on a support or a resistance line. That means when using this strategy, try also, whenever you are taking a position here, you have to do what, make note of your support and resistance. So whenever I hit that point and it's seeming like it doesn't want to keep on going to the uptrend, you what, take a stop to your trade and you take profit. So looking at this now, there's a possibility that this market now, as you can see, is dropping rapidly, might drop all the way down here and refuse to touch the blue line here, but rather starts going up again. And then from that, you have taken profit here. Once it starts going up, you take profit to this position. It's what, probably goes down and then breaks out somewhere here or to the upside, or it breaks out here, which is the current support, falls all the way down to this position I told you here, which is the point 105.319 or thereabout. It's just an estimate on that. So that's what we should expect right now. As you can see, the market is falling. So this place is good enough to be kept as a second point. So here is the second point. I believe this place now is stabilized as a third point, because as you can see, it's finding it difficult to break out of the trend line. So we can call this the third point. So the third point should still hold up until what, it gets to a good support and then breaks out. As long as it didn't break out here, we're not expecting it to break out anything more than this position. So it might get here now. Once it gets here, you take out your profit. You don't have to wait for it to get here because you are at a strong support level. But if it eventually breaks out of this support level here, we can't see it going to the support again, because this section is too strong. It has held up once here, also held up once here. That means breaking out of it means that we are going all the way down. So the market is still falling. And now, how can you put a stop loss zone on this? Take out your Fibonacci retracement now. So as I stated with your Fibonacci, you have to put the 0.0 at the lowest point here, which should be here. Okay, so this is your highest point. Now the third point has held, so we can state that as being our support zone. So we can put the 23 at the top here. So this was the very top of the third point. That means our stop loss should be at the point 114.931 dollars. So it's been completed. All we have to do is to what? Wait for this to go through. You can put your stop loss at 114.962. Then you wait. Once it's completed, you take profit. But as you can clearly see now, we are on a downtrend, and then the possibility of we getting here might not be 100%, but work out with your what? Line of support. Once you work out with your line of support, you can then put your take profit at this particular zone of 112.407. If you do that, you'll be better in taking your profit. But if you wait to get all the way probably below here to this blue line, it might not get there. It might hit here at your 112.410, then start going all the way up here, then break out, and that's all. It hits your top loss at the 0.114. So let's watch this out now. We have some few seconds to go. I even have this running here. So this was entered too early. So I have this running here. So let's check this out now. How low are we going? But I might not be able to keep up to make this video much reasonable in length, because this might take some few minutes. As you know, it's a 3 minutes time frame. It might take 3, 6 or 9 minutes to complete this, and we can't wait out for that. So that's it. This is how much and how far I'll be going on this tutorial today. Make sure to like this video and leave a subscribe. Have a nice day.